Hello, this is John Piper with the weekend video clip, and it's Saturday the 10th of October. Looking here at the chart of the DAX. This is the 4-hour chart, and no real change of opinion. Let's go through the basic count. ABC, A wave, B, and 1, 2, 3, 4 new lows. Only market that, well, of European market did that. So that is the fifth wave of C, 6-month decline. And so far we've seen this little blip up. I say little blip up in the context of the decline. Clearly we've seen a pretty solid rally looked at in the shorter term, 800 points or so. So not to be sniffed at, and Volkswagen continues to do well, which is great. Let's have a look at the form of the rally. Okay, so clear ABC at the moment, 5 waves A wave, that's acceptable. ABC B wave. And no great form here. I thought we were quite near a peak now. We have the expiry coming up next week, tendency 2 action to expiry. I think we're going to see probably a B wave. So I count this as an A wave, not necessarily complete. I think next wave we're going to see the market go broadly sideways, so maybe quite a volatile up-down action, and then perhaps a slide away after expiry, but probably just a retest with a rally then developing into the end of the year. That's my preferred hypothesis right now. So I think the lows will hold on this occasion, that we'll probably see, I'd say, the markets go fairly nicely into 2016. Alright, so FTSE, basically we had a move down to there. We then had this sort of semi-triangular thing without the finishing touches. So I count there's an A, B, C, same move. Didn't see new lows. So the count here is that A, B, C, which could actually be complete. If you look at the peak here around April, down to the low in August, so very different time frame. It's about 4 months. We've already seen a rally for 2 months, which is bang on the time scale when you could actually see a reversal. So I think on FTSE and the Dow has a similar pattern, and not the same but similar. We could see something more significant develop from the peak I'm expecting in the very short term. The October expiry could be a lot more negative on this market than, I mean, I think the DAX will follow suit. I'm just looking at the various parameters on each market. I've also seen a much bigger correction here in the sense it didn't fall as far. So we had about the high around 7.1, the low around 5.8, 1,300 points, and we've gone up 600 points. So we're almost 50% level. Could be very close, in fact, to that level. And you know that's where you start to see that's when major reversals can come in. So you know this pattern here re-invites the idea that the October expiry could be more important than the chart of the DAX suggests. Okay, here's the IG chart with the Fibonacci fan lines on it. Sorry, retracement levels on it. So you can see the 50% level is actually pretty damn close. These aren't precise. I mean, I missed that low slightly, so the actual figure will be a little bit lower than that. But obviously, 50% is not a difficult calculation. So I'll just do it quickly while I'm on, as it were. Okay, I'll make it around 6,430, and the actual high came in. Let me get this right. The actual high came in at 6,454. So we're just over the 6,430 level. I would check the maths, by the way. Always worth doing these things yourself. You learn much more by doing this kind of work rather than just taking the figures from elsewhere. Especially if there might be errors in whatever the best intentions might be. Anyway, I'm making 6,430, so 20 points move above it, but we end up below it, so a bit of a fail break, but above that level. So let's check a lower scale chart. This is a 5-minute chart of FTSE. You can see a double top in place. Here you can see actually a 1, 2, 3, 4, 5 possibly, with a feeble move here. So I would say that FTSE is a good shorting candidate for Monday. Stops above here, entry points. We see a rally. It would be ideal, of course. I mean, the best thing one can look for is some kind of spike coming in. Then you can. I'd still use a stop up here, probably, depending on how it looks, but a sell into that kind of move there could be quite useful on FTSE. It may well apply to other markets as well. Okay, the Dow, similar kind of pattern. ABC A, B, C down to there. A move from around 18.4 down to 15.2. So about 3,200, 1,700 would be the, so about 16.9. So it's again above the 50% level around there probably. Again, please check that. But similar parameters, we've got the ABC, B, then there's rally, with I think a fair indication that we could well see, well, I say two. Normally we see two-way action into expiry the last 2 weeks, so I'd expect if we can see fireworks, they're going to come in after expiry, which is on the 16th. Right, gold looking encouraging again. 5 waves up to there by my count. ABC to there, 1, 2. That can count as 5, but again it's a bit of a. I think the 5th wave is a bit truncated, but let's say that's 1, 2. So looking here for a 3rd wave. It's made it up above the resistance here, not convincingly, but it has done so. We just need to see a move here. If we do see a reversal next 2 weeks, and I could see gold will start to move above here. If we start to motor above here, then I think that would be confirmation that we have actually seen a major low. That's what I'm looking for. I would just, it's sometimes quite useful to actually look at these things and say, well, what would a bear say? So let's see what a gold bear might say. I think a gold bear might say that that's a impulsive decline. We have an A, B, C rally there. That looks like an ABC, but let's just say the bear, that there is a truncated 5th there as well. Wave 1, A, B, C, 2. Sorry, A wave, B wave, C wave, and an impending disaster coming in there. So as I said, this is the key level here, 1170. I think the key time frame is actually the next 2 weeks. If we don't see gold above 1170 in the next 2 weeks, then I don't have concern about this position. Okay, on China we had this big move down. So we get into this frame, big move down. ABC, 1, 2, 3. Now we're seeing this triangular drift here. So let's get rid of that thing. I put my stop above 3200, so that's now a little bit vulnerable. It's a bit vulnerable to a blip up. I'm looking for the market to go down next week. I might actually move this. I don't often move stops, but I'd rather leave this to run a bit. I don't want to be stopped out by a spare move up, so it'll spike up, stopped out, I'm going to go down again. Possibly, I'll see how I feel about it. I'm not sure. If anyone else is positioned on this, please, if you want to discuss any point, please let me know. But I would expect the Chinese market to come down as well. If we do see this fall, I'm expecting coming in the next 2 weeks. But this is fairly long in the tooth, but it did end on a high note on Friday. Let's have a look at that in a bit more detail. Not a huge amount to say really. We got the market just drifting sideways over these 4 days, in fact. So not a huge amount there, but again, a stray rally could easily move above 3.2 just to stop out all the bears, me included. So as I say, I may move the stop on that one. All right, finally euro dollar. We've seen this big spike, end of the correction. 5 waves down, ABC, another nice blip down, but again a retesting. It's gone like quite a long way, and I've actually reduced my position size. My stop is around here. I think I'm staying with that one. It's looking fairly good still. We do need to see a move down below here, so it's not coming in very quickly. Right, on that note, I'll call it a day. Hope you found that interesting and useful. I'm back with a report on Tuesday morning. Have a great weekend. Thanks for listening, and bye for now.